We have a really big problem right now with the dollar. We're able to print trillions of dollars, spend it into the economy, and see debt to GDP go up. If we don't figure out a way to strengthen our financial position, we will get to a point where people will not even want to use the dollar as a medium of exchange. So what the United States needs to do if they want to strengthen the dollar is to take some of the money that they're printing and buy Bitcoin. In 2019, I bought my first home, a small single family home, for 100 Bitcoin. And today, I look at the price of Bitcoin and could have 12 million additional dollars on my balance sheet. Instead, I have a house that I'd be lucky to get $500,000 for. It makes sense when people understand where we are in the adoption curve. You do not want to be giving up ownership of your Bitcoin. So what we need are tools that allow people to unlock their purchasing power without giving up ownership, which are financial tools that allow you to borrow against Bitcoin.
What does that look like?
Yeah, I think...
Let's jump into it, CJ. So I'm going to start off with a big question here, set you up, and then we'll dig into this. So you've said that we're in the final stages of this currency's life cycle, and we're facing a debt-death spiral. But yet, when I look around, we see the stock market is at a near all-time high. The official narrative is basically a very strong economy. So what would you say the vast majority of people, even savvy investors, are completely missing right now?
Yeah, and that's a great question, Mark. And first of all, thanks for having me on. I'm not you. I know you don't remember because you're so popular, but I actually met you at a Rebel Capitalist live event conference, and it was really cool meeting you. So it's great to be on this side of the camera. It's fun. But yeah, I think we are in the middle of what would be considered a debt spiral, and most investors are missing. Funny enough, the basics, and the basics come down to the difference between money versus currency. We don't get it taught in school. If you go for accounting and finance, you'd think you'd learn something like that, but you don't. So you really have to do some deep digging into some alternative economics before you figure out, oh, wait a second. The dollar is a currency. It's not a money. Okay, well, what's the difference? A money is a store of value, and a currency is a medium of exchange. So a lot of people look at Bitcoin as being a competitor to the dollar. A lot of people who misunderstand Bitcoin, investors in the marketplace, think Bitcoin is trying to compete with the dollar. I think they're complementary. And the dollar is global, it's worldwide, it's the reserve asset. Why in the world would you try to compete with a medium of exchange technology that has already captured pretty much 100% of the global economy? It doesn't really make that much sense. But what we know about the dollar is that it's not a store of value. It's a really bad store of value because it can be issued ad infinitum. And ever since 2020, we've seen that peak up dramatically, which is waking people up to the fact that a money is a store of value. And to be a store of value, you can't increase the supply at ridiculous rates. Now, we have a natural money in gold, which through its cost of production limited its supply expansion. But with Bitcoin, we have not just a natural money, we have an engineered money. We have something that through computer code introduces the concept of absolute digital scarcity. For the first time in human history, we have a monetary asset that supply cannot be expanded. That's a really hard pill to swallow. And it's really hard to understand that the only way to get the increase of supply in Bitcoin, the only way to get the circulating Bitcoin to increase is to get the price to go up. So because of that, I believe that was a strategic design. And therefore, I call it engineered money. So we have this savings technology that you can use along with spending technology, being the dollar, and some magic happens when you do that. So I look forward to getting into borrowing against Bitcoin with dollars being the best way to spend your Bitcoin without giving up ownership. But it's a wild time we're moving into right now, and I do think many are missing it.
So what you just said, I think, is then Bitcoin is this new engineered type of money that's solving a different need or a different purpose than what the fiat currency is doing. But again, is the fiat currency at the end of the final stage of its life cycle, or it's sort of run the course and now we need something else to complement it?
Well, I think that we were in a position to where the currency itself could somewhat serve as a store of value. So I do believe that if the currency system wasn't abused and the amount of dollars wasn't expanded at the rapid rate that we see today, at least $2 trillion in our ongoing deficit, then theoretically, the dollar could maintain its value. And if credit was not extended ad infinitum, and the supply of dollars declined, perhaps the dollar could even gain value theoretically. So it has the ability to actually function that way. But because we have put ourselves in this position, because we have allowed ourselves to conform to the idea that something is too big to fail, we now find ourselves in this situation. See, with Bitcoin, when we went through all of the rehypothecation scheme of version 1 of Bitcoin lending with Genesis and FTX and BlockFi and Celsius, and we had this big rehypothecation period, when it collapsed, we couldn't print the Bitcoin. So we failed. But that failure is a critical part of the business cycle. And in the traditional markets, we don't get that part of the business cycle. We print over it because it's too big to fail. And when you don't allow companies to fail, what you're doing is you're creating zombie companies. And I think we've gone so far now that these zombie companies have infected the economy, and we have a zombie economy. And that's why we're able to print trillions of dollars, spend it into the economy, and still see debt to GDP go up. Still see our financial position become less and less healthy. So we have a really big problem right now with the dollar. And if we don't figure out a way to strengthen our financial position, then yeah, we are at the end of our life cycle. We will get to a point where people will not even want to use the dollar as a medium of exchange, because if they don't spend it immediately, they're going to be able to buy less and less stuff over time. And we're seeing that ramp up since 2020, and people are paying attention, but we haven't gotten to that hyperinflationary point. But the only difference between inflation and hyperinflation is trust. So if we continue to abuse the printer and abuse the trust of we the people, then we will get to a point where dollars will end up worthless on the street. And I don't want that, and I don't think anybody in their right mind really wants that.
So would you say that then, because of this endless money printing, the monetary debasement, which I agree, they say there's only two things certain in life, death and taxes, and I would also probably put money printing there. Since that is not scheduled to end anytime soon, and it's pushing this to the final stages, as you're saying, also, most people at this point know that they shouldn't be trying to save their wealth in dollars. There was that meme of Michael Saylor saying something about we have a word for them, we call them poor. I think it was something like that. I'm sure you saw it. Which is why then, as I said, at the same time, we see stocks making new all-time highs. But I think what you're saying, though, is that because the dollar is being printed to infinity, the debasement is continuing to go on. If we continue down this path, nobody's going to want to use it, a loss of trust, hyperinflation. But then are you saying that potentially Bitcoin could help extend the runway and the life of the dollar?
Yeah, absolutely. Because what we're doing right now is we're printing those dollars and we're investing them into the economy. But we're printing a dollar with interest, call it $1.04, principal being $1, 4 cents being the interest, and we're investing it, and the return on investment, depending on the tax bracket of the vertical you're investing in, is really maybe 30 to 50%. So we're investing $1, we're only getting back 30 to 50 cents. We need to get back more than $1.04. And because we're not getting back more than $1.04 through that investment, the debt continues to grow. The unfunded liabilities continue to grow. The debt to GDP continues to grow. We become in a weaker and weaker position. And I consider this a matter of national economic security. If you look at El Salvador, they have some of the best performing traditional bonds in the world. Number one, because Bukele is cleaning up the country. But number two, because they put Bitcoin on their balance sheet. And what that does is it strengthens their financial position. So if something were to go wrong, they could tap into that 24/7, 365 liquid marketplace that Bitcoin is to fix that problem. So what the United States needs to do if they want to, I think, strengthen the dollar is to take some of the money that they're printing and buy Bitcoin. Because when you put Bitcoin on the balance sheet, if you take that dollar, you invest it into the economy, you're not getting back principal plus interest. If you invest it into bringing out natural resources, it's going to take significant investment and time to actually see any revenues from that. I'm pretty sure nobody wants to sell Alaska to Russia. So we're limited on how we can monetize the asset side of our balance sheet, and we're limited on what assets we can invest in to amplify the performance of the asset side of our balance sheet. And then here comes this magic internet money, Bitcoin. But it's absolutely digitally scarce, and it's engineered money, and it was strategically designed to store value over space and time. And when we take that dollar and invest it into Bitcoin, yes, there will be ups and downs, but in the long run, Bitcoin's 5-year compounding annual growth rate is over 60%. Its 10-year compounding annual growth rate is over 80%. The adoption rates are following that of the internet, and we're at the very beginning of it. Everything here, all the signals are telling us if we print some money and buy Bitcoin, or if we use budget neutral strategies to accumulate Bitcoin and we get it on the asset side of our balance sheet, for the first time in a very long time, we have a chance for the asset side of our country's balance sheet to outgrow, or at least the growth of the asset side to outpace the growth of the liability side, right? Because we have over $100 trillion of unfunded liabilities over the next generation. We're going to have to pay those bills. We're going to have to fulfill those promises. We need an asset that can keep up with the spending that we've promised to do. And if we don't find that, the only option is dilution. So it's a catch-22 because, if the Fed lowers interest rates, and I know Powell's got his Jackson Hole meeting this weekend, I'm sure he's going to have a fun time paying back Trump for visiting him on his Federal Reserve construction site. So I don't think anything friendly is going to be coming from this meeting this weekend. I think Powell's mission is probably to get Bitcoin back under $100,000. But if he lowers interest rates, there's $7 trillion sitting in money market funds right now, of which over $3 trillion of those dollars is retail. So just like that retail money and corporate money left the banks when they were getting no interest because the banks were holding those treasury bonds because they were forced out the risk curve from ZIRP. When they move back out of the money funds, where are they going to go? They're going to go into Bitcoin, real estate, stocks, and other goods and services. We're going to get an influx of demand against a limited supply of goods and services and hard assets, and prices are going to go up. But what if he raises interest rates? Well, then at the same time, if you raise interest rates, the interest expense is going to go up. And when the interest expense goes up, you have to print that money to service the debt. So no matter which way he pulls this, we have to print money. But when we print that money, if we take a little bit of it and we put it in Bitcoin and we allow Bitcoin to do what it was engineered to do, we can actually salvage the dollar, or at least buy some more time to fix the real problems, to address the problems in a truthful way and try to move forward rather than just kick the can.
Yeah. So at the time of this recording, it is August 20th, 2025, just so everyone can understand. He's talking about the upcoming meeting. As of today, I looked earlier on the CME, the odds of a rate cut are now 85%. So by the time you're listening to it, we'll probably be on the other side of that, so we'll see how things shook out. But I think one way or another, whether it happens at this meeting or the next meeting or not until Trump gets Powell out and replaces him, rates are coming down. That is almost a certainty.
Every day we see headlines about inflation and debt and diminishing control over our own money. That's why I always come back to Bitcoin, because it's built for generations. It's built for legacy. But protecting your Bitcoin legacy the right way, it's not always simple. It demands discipline, focus, and the right partner. Now that's why I personally use Unchained Signature. It's a premium private client service for serious Bitcoin holders who want expert guidance, resilient custody, and an enduring partnership. Now with Signature, you're paired with your own dedicated account manager, someone who understands your goals, helps you every step of the way. You're going to get white glove onboarding, same day emergency support, personalized education, reduced trading fees, and priority access to exclusive events and features. Unchained's collaborative custody model is designed to provide the same security as the world's biggest Bitcoin custodians, but for those who prefer to hold their own keys. Now, I've been using and recommending Unchained for years. I even got my parents to set up with them. So if you want to get set up, check out Unchained Signature at unchained.com/MarkMoss. And as a loyal listener, I got a discount for you. Just use code MOSS10 at checkout to get 10% off your first year, because your Bitcoin isn't just for life, it's for generations.
Well, let's remember they've tried to lower rates, and the market didn't necessarily agree with them. So I think one of the biggest risks is the Fed comes out, even if Powell doesn't do it, and next May he gets replaced by Trump's appointee, and that's going to be a pro-Trumper who's going to push rates down. Even if they state the federal funds rate down, which is the front end of the yield curve, it's really going to be the free market on how they treat the 2-year. So if the 2-year and the 10-year don't participate and don't get anchored down by the stating of the front end of the yield curve lower, all the rest of the interest rates, like your mortgage rates, are not going to follow down. The federal funds rate, it's an anchor rate, but it's an interbank lending rate. The regular people are not banks, so we don't have access to an interbank lending rate. Now,
Right.
it is an anchor rate, so everything's supposed to come down because of the arbitrage opportunities that are created between institutions and the products that they have access to at the Federal Reserve, like the repo market. But that doesn't mean just because they say the rate goes down that the rate is going to come down. And if they state the rate down and the rate doesn't come down, they have a really big problem. I think that's why they've been so hesitant. They tried to lower it a couple times. The free market didn't agree. The free market is saying, look, you're diluting. I'm lending you money. You're giving me cash equivalent collateral. While I'm holding this collateral, you're printing 2 trillion more units of this collateral every single year. The collateral is being diluted too fast. I cannot lend you this money at a lower rate. I am demanding this rate so that I can at least break even. And I think at this point, real interest rates are negative. So the cost of cash flow is a negative real rate of return at this point. And that dynamic, I think, I think sophisticated investors understand that, but most investors do not understand that at all, which is exactly why we see market prices where they are today.
Yeah, certainly. So, I have a Bitcoin savvy audience. Most of the people here are already probably buying Bitcoin, owning Bitcoin, things like that. And to the point that you're making, I mean, Bitcoin's down a little bit off of its all-time high from just a couple of days ago at the time of this recording. Maybe it'll come down a little bit more. Maybe it won't. We don't know what's going to happen in the next couple of days. But to the point that you're making, we sort of know the direction it's going over the next months and quarters and certainly years ahead as that endless debasement kind of continues. Regardless of which way that works out, like you said, damned if you damned if you don't. If rates come down or they don't, either way, more money printing is coming on the back of that. Bitcoin is the most sensitive asset to global liquidity, and so, of course, it goes up the most. Now, for a lot of my audience who's already been listening to this for a long time, they've been dollar cost averaging into Bitcoin for a long time. Maybe hopefully they've seen a lot of appreciation in that Bitcoin stack. I've seen that happen a lot. But a lot of people end up in a dilemma. Jack Mallers called it the hodler's dilemma. So I bought Bitcoin. I did what I was supposed to do. I held like I was supposed to. I have a lot of wealth supposedly on paper, but my life hasn't gotten any improvement. Michael Saylor says you never sell your Bitcoin. So how does a Bitcoiner solve that problem?
Yes. Well, Mark, no one knows it better than us. Welcome to our lives, right? I've been Bitcoin since 2013, and the number on the screen keeps going up. But life doesn't change until you can leverage that wealth, till you can unlock that purchasing power. And that's exactly what we do at People's Reserve. We're designing Bitcoin-powered finance products that enable the responsible saver of Bitcoin to unlock the purchasing power of their Bitcoin without giving up ownership. And the whole idea behind People's Reserve really started with my own failure, my own mistake. And that was in 2019, I bought my first home, a small single-family home, for 100 Bitcoin. And yes, I knew it was a bear market, but my wife was pregnant, and relative to my overall Bitcoin savings, if I didn't do it, she would have killed me. So I had to buy that house, And today, I look at the price of Bitcoin, and I could have $12 million additional dollars on my balance sheet. Instead, I have a house that I'd be lucky to get $500,000 for. So it makes sense when people understand where we are in the adoption curve, right? We talk about that S curve at adoption. We are at the bottom of the S curve. There's an ongoing transfer of wealth, and it is about to accelerate. Right now, you do not want to be giving up ownership of your Bitcoin. It is the most valuable asset on your balance sheet by far. It has the greatest potential by far. And if you're in a position where you have to give it up, that could cause long-term pain. And in my case, I could have 12 million additional dollars that I don't have access to. Now, luckily, I was a responsible saver of Bitcoin for a long time, and it made sense, but not everybody's in that position. So what we need are tools that allow people to unlock their purchasing power without giving up ownership, which are financial tools that allow you to borrow against Bitcoin. But the biggest thing, the biggest risk in this, and again, this is from another one of my failures. So it's funny how in life we end up learning most from our failures. And I'm sure a lot of your listeners may have been in a similar position. But going into 2020, going into what was COVID, we were also going into the halving. So as someone who had been part of 2 cycles, I figured this is a no-brainer. So, of course, I'm on BitMEX. I'm levered up. Baby, we're going into the halving. Let's go. Lever up. This is going to be fun. Yeah, and then we have a liquidity crisis, right? And then we have COVID, and price falls from 10 to 5, and I'm getting margin calls. And I'm posting a little bit of extra margin. I don't know how much lower it can go. 50% in such a short time is a lot, right? Bitcoin's volatile. It'll bounce back up. Well, no, overnight went below $3,800, liquidated, 400 Bitcoin, gone. So again, another experience I had where it's just a horrible experience to see Bitcoin go from 10,000 to below 38, lose a portion of your Bitcoin that you had leveraged and borrowed against. And then a couple months later, it's right back where it was, right back at the $10,000 point. But it gave me the idea of, for our products at People's Reserve, specifically our Bitcoin-powered mortgage product, that there is the ability, there is the chance to eliminate liquidation risk. So in that same COVID-like scenario, if you came to People's Reserve to get a Bitcoin-powered mortgage, what we do is we cross-collateralize the real estate with the Bitcoin. And by doing that, we can eliminate liquidation risk. So as the price of Bitcoin goes down, every 10% it goes down, your interest rate goes up 50 basis points, or half of 1%. So during the COVID example, you go from 10,000 down to 5,000. That's 5 deviations, or 50%. That's 2.5%. So for a couple of months, you would have paid an interest rate that was 2.5% higher than your starting rate. But as Bitcoin recovered and rebounded, for every 10% price gain, you get those points back. So by the time, 2 months later, you're right back at your original terms. Plus, you had no liquidation risk. You bought your new home, and you can actually sleep in your new home because you don't have to worry about getting liquidated. This is something that we're really excited to offer to the marketplace and to innovate with.
So I have Bitcoin. I've been holding Bitcoin. I have option A, which is to sell my Bitcoin and buy the house, which, by the way, lost opportunity cost is what it is. And to your point, you could have had $12 million instead of a $500,000 house. That being said, what you have is you've had a house for your family for the last however many years, and it's priceless, right? At the end of the day, I just want to just lay this out for everybody. At the end of the day, we don't want money. We don't want money. We want the goods and services that money buys us. And so if you have a family, you got kids, you want to support them, I mean, it's worth more than the Bitcoin. The last couple of years, I built a beach house down in Mexico. We've dreamed about it forever. My wife and my kids are getting older, and we built the house, and I had to pay cash for the house, and it was very expensive. And so many Bitcoiners are like, why would you put all that cash into a house? Don't you know how in 5 years how much that Bitcoin will be worth? And I'm like, why? So one day I can buy a beach house? Right? So I do just want to kind of put this into people's minds. Like, we want money to get things. It's a means, not an end. But that being said, so let's talk about how this works for you. So we're in this scenario today. We have the Bitcoin. We think that it could run to $500,000, $1 million in the next 5 years. I don't want to sell right now at 100,000, 110, 12, whatever it is, and then miss out on that. But I want to buy the house. Now, you're saying that you could give me a loan against the Bitcoin to buy the house, or you give me the house against the Bitcoin, but the interest rate is variable based off of where the collateralization is or the loan to value is?
Yes, that's correct. And what we do is we don't count the house is actually serving as collateral too. So the loan is secured by the property and by the Bitcoin. And the rate is adjustable based on the value of Bitcoin. So if you get into a scenario where you default on your payment, because you can't get liquidated based on price volatility, but if you default on your payment, the goal of us would be, instead of going through a foreclosure and eviction process, which could add up to over a year and a lot of costs from the lender side, we'd rather just give you a call and say, hey, we've liquidated the portion of your Bitcoin to close your loan. Congratulations, you now own your home free and clear. And what you said earlier, I absolutely agree with. I raised my family in that home. I went from 1 kid to having 4 kids in that home. So I have a lot of great memories in that home, and I wouldn't trade it for anything. So it is important for your listeners to understand that. But at the same time, for those who haven't been involved in the marketplace for a very long time and are just now starting to experience the benefit of Bitcoin's price appreciation and getting the opportunity to deploy that purchasing power, using a product like this, I think makes a lot of sense, because we've taken all the steps that we can to learn from the failures of version 1 of Bitcoin lending. So no rehypothecation. We actually have a self-custody option If you do custody it with us, it's held in our fund, which serves as a special purpose vehicle. So the Bitcoin is not on people's reserves balance sheet. It's separate. So there's no way that we can hold it. There's no way that we can leverage it or rehypothecate it. Just little things like this that we've learned over time. A lot of these fiat finance mechanics don't really work in Bitcoin. But at People's Reserve, I say that we're Bitcoin maxis building for Bitcoin maxis, which means we want to self-custody our Bitcoin. We want proof of reserves. We want guarantees of no rehypothecation. And we want low interest rates. It does not make sense to me and to People's Reserve that a Bitcoiner who holds the most pristine form of collateral in the world and who, and many times, is over collateralized, right? Like in one of our loans, if you're going to buy a $500,000 house, you have to put up at minimum $500,000 of Bitcoin. Well, with other lenders, you'd like to shoot for a 50% LTV. You're going to put up $1 million of Bitcoin to get that 500,000.
So you're saying you may do a 100% LTV loan?
Absolutely, because it's cross-collateralized with the real estate. So the value of the home is securitizing the loan as well. And that gives you an advantage.
How would the rate be set, and how does that vary? Because typically you look at, nobody buys the house. They don't buy $500,000 house. They buy a monthly payment. And that monthly payment is typically from the creditworthiness of their monthly income. Mm-hmm. And so a lot of times most people are probably maxing out what they can afford on a monthly basis. So if that payment jumps a couple points, it could be detrimental. So I'm curious, how do you set that rate on the low end? And then is there caps on how high or how low it can go?
Yeah, so we are a U.S.-based company. So the usury rates are our caps. We cannot commit usury against our borrowers. But our whole thesis is that Bitcoin as pristine collateral is the lowest risk collateral. So when you work with us, we actually don't care about your credit score. We don't care about your income. As long as you can post the Bitcoin, you can get the financing. Also worked into our contract is a grace period. So if you default on your payment, depending on what state you're in, you have somewhere between 90 and 120 days to cure your default. So it's not an immediate liquidation. It's not DeFi like a smart contract where it's like, oh, this number was breached and boop, it automatically happened and you're done. Right. No, it's a contractual agreement. It's a handshake. We're going to look you in the eyes and shake your hand and give you the best chance that you can have to benefit. The other thing is maybe you lose your job. Maybe you have a good income, but you lose your job. You're going through a tough period, or you're relocating. You got to find a new job. Well, you can pay your monthly payment from your Bitcoin collateral. And since you're initiating the loan with a 1-to-1 ratio, you can pay quite a bit of payments. You can make almost all of the payments as long as the price of Bitcoin stays stable without having to produce any cash flow to make those payments. And that allows Bitcoin to compound its value over time. And at the end of it, even if you make from those payments, with Bitcoin's compounding annual growth rate being so high, over 60% in the 5-year period, even if that gets cut in half to 30%, or even more down to 15%, the rate at which that Bitcoin equity will grow over the life of the loan will allow you to make the payment from the collateral and then still have leftovers at the end of the loan. We wouldn't recommend that because the goal is to hold as much Bitcoin as you can, right? But if you're in a tough spot, there's no reason to default. Make a small payment from your existing collateral.
Yeah, I love that. That's a good idea. What about, where does the rate get set? I mean, are you going up? You talked earlier about the Fed setting the rate and then people marking that up. So is it prime plus a couple points? And then you said, it goes up. I think you said if the LTV comes down, then the rate goes up and it oscillates. So where does it start? What are you measuring off of? How high does it go? How low does it go, et cetera?
Yeah, and fantastic question. And this is one of the things we're most excited about because we're going to offer the best rates in the industry. I believe Bitcoin-powered finance will redefine the risk-free rate and redefine the risk-free borrower. It is no longer going to be the entity who has the power of the printer who is known as the risk-free borrower. Just because you can print more of that collateral and pay it doesn't mean it's a pristine collateral. So because of that, we are using multiple strategies, including a fund LP strategy, to where we are not partnered with people who practice fractional reserves. So what that means for us is that we do not have to marry our business model to the traditional yield curve. And what you see in traditional Bitcoin lending is that the lender will be partnered with a banking partner. They will have a line of credit at a certain rate. And therefore, in order for the business to be profitable, they will have to arbitrage the difference between their borrow rate and their customer's borrow rate. Right. So if you're, prime right now is 7.5. If you're, you're at prime plus 50 basis points because you have a good relationship and you're at 8%. You have to turn around to the Bitcoiner and say, I'll let you borrow at 10%, 12%, 15% in order to make any profit. With People's Reserve, our cost of capital is zero because we've sourced it from LPs who understand that it's time to get some diversification within your lending portfolio. Yes, you can lend to the government for risk-free borrowing. You're going to get your capital back. Yes, you can lend to the municipalities to generate risk-free cash flow, but you have systemic risk. You need systemic diversification. You should lend to Bitcoiners. And the light bulb's going off because of the abuse that we've seen since 2020. Now, I say all that to say this. We don't want to be, as a longtime Bitcoiner and free money maximalists, you can't have free market money when there's a small group of men who tell you the price of the money. It goes against free market concepts. A free market money means that you need free market price of money. And the price of money is the interest rate. So the interest rate should be determined by the supply of money, the demand for loans, and the counterparty risk. That's how you price money. Stating the rate and anchoring the rate and doing Federal Open Market Committee exercises and executions to balance a rate or to force a rate like you see with yield curve control in Japan is not free market money. So at People's Reserve, the starting interest rate, to finally answer your question, sorry about that, but to finally answer your question, the starting interest rate at People's Reserve is 10.5%. And what we allow you to do is either through the appreciation of Bitcoin going up in those 10% increments or by over collateralizing. So if you borrow 500,000, you can max over collateralize by 200%, which means you're going to post $1.5 million worth of Bitcoin. And we allow you to buy back percentage points. So you can knock off a total of 4 percentage points from that 10.5% starting rate, and you can get a 6.5% rate with a Bitcoin powered mortgage. That's prime -1 right now. So that's the best rate in the Bitcoin industry. And it's a very competitive rate when you consider where the TradFi market is. But Mark, that is at our basic loyalty level. We have different loyalty levels through our loyalty token. And if you qualify for our diamond level, which means you own 10% in our loyalty token of your loan value. So if you have a $500,000 loan to buy your home, you're going to own $50,000 of our PRN loyalty token. Your starting rate is actually 7.5%. And then if you over collateralize and knock off that same 4 percentage points, you're going to borrow at 3.5%. That means you're going to have access to the lowest, cheapest cost of capital for any home buyer in the world. You're actually accessing capital for cheaper than the government. And we're able to beat that SOFR rate because we're not partnered with money printers. We have sourced our capital. We have sourced through LPs who are looking through that diversification, understand the cracks that we see within the system, and they want systemic diversification. And the best part about it is if something goes wrong in our product, you're not getting back printed dollars and then rushing in to an asset that you're going to buy a smaller home, a crappier car, less stock or equity. You're actually defaulting into Bitcoin and real estate, the two assets that you really want.
Yeah. I was having a conversation with an investor buddy this morning, and we were talking about this exact sort of conversation, which is what is the free market price of money right now? And he was trying to explain to me how his home should be tokenized and real estate should be tokenized and they get greater liquidity and then loan pools and this and that. And I disagreed with that. But he's like, Mark, you don't understand. Like, I have this home on the beach and it's worth millions of dollars and I can't get an equity line of credit because I run my own business and da-da-da-da. I said, look, there's hundreds of hard money lenders that will give you a loan against the equity, asset-based loan. I'm not going to pay those rates and you know what the loans are and da-da-da-da. I said, listen, that's the free market rate of money, though. You have to understand, like mortgages and auto loans are both basically manipulated or subsidized by the government or the automaker, which is by the government, right? So it's like auto loans and mortgages are basically subsidized. So hard money is the rate at the market. And I said, I have this question, this question come up all the time with people borrowing against Bitcoin where they're like 12%, 15%, are you out of your mind? But it's like, that's the cost of free market capital right now. And I said, the flip side, again, he's a wealthy investor. I said, how much would you loan me cash for? You're going to want minimum 10 or 12%, right? And so I think it is important for people to sort of understand that. We are in this world, as you said, where the price of money is set by the government. And so government-backed, subsidized, push loans like autos and residential mortgages sort of they're manipulated, and so it sort of distorts our view of what the fair market price of money is. But you know,
And
the
existing hard money is tied to that yield curve. And that's the problem, because
it's tied to the yield curve, but it's also based off of demand. So a lot of hard money that's going out today, asset-backed loans, is private money. I used to be involved in that industry. I was a California finance lender.
And risk.
And risk,
right? You
certainly.
can't
But it's also
forget the risk
demand. Like,
variable.
I want to get the most the market will bear. So, hey, you'll loan the guy at 12%. All right, I'll give you 11.5. I'll knock off a point, right? And so it's whatever the market will bear, plus what I'm willing to put it out there, the risk I'm willing to take, et cetera.
Absolutely.
Anyway.
And the advent of Bitcoin as pristine collateral, I would posit is negative risk. And so when you post Bitcoin as collateral, because it's engineered money that was strategically designed to accumulate value over time, when you post it as collateral, you become deleveraged, right? So when you buy your car and you drive it off the lot, it loses value. Right. And the more you drive it, the more wear and tear it loses value. This is why it needs to be subsidized, much like a home, because there's a lot of wear and tear.
So I have a $50,000 loan on the car, but the car is only worth $40,000 now.
Yeah, and it becomes more and more risky of a loan over time. The opposite is true with Bitcoin, and that's only with Bitcoin. Over Bitcoin, because of its engineered design, it auto deleverages the borrower. It is the advent of negative risk. You cannot plug negative risk into TradFi risk models. It's like going into a Power Excel sheet and putting in the wrong information. All the error codes come up. Like you mess something up. Something in some cell is wrong. I can't calculate this. That's what happens when you try to plug negative risk into TradFi credit models. Bitcoin is the advent of negative risk. And therefore, we're going to be able to beat the interest rate in any marketplace because of the lack of risk. Risk is the factor that has been mitigated through subsidies through the government. But in the free market, how do you mitigate risk? By the quality of the collateral.
Right. Now, I've heard you talk about sort of painting a future based on Hal Finney's vision, Hal Finney being one of the originators, one of the first couple people that helped work on the Bitcoin protocol, where entities like MicroStrategy become a central bank of the internet economy. Fast forward like 10 years, what does that mean? What does that look like?
Yeah, I think that there's going to be two competing systems as we transition into the future of finance. And one system will be the stated and anchored system where the rate is controlled by central banks, and the other system will be more of a free market system. I like to call it the internet economy, as you said, because it's the only economy in the world that is debt-free. It's the only economy in the world that can't be outcompeted by any one economy because it's an aggregate economy of everybody. And it's the only economy in the world that can't be controlled by any one person or power. And because of that, this is where decentralized finance has really flourished. And this is why a lot of capital, you see BlackRock rushing into stablecoins, you see stablecoin legislation going through. A lot of that is getting access to the opportunity in DeFi where we actually have a free market rate. When you look at funding rates within the internet economy, where people are using leverage just to make bets on Bitcoin, the annualized rate on that could be anywhere between, depending on how hot or cold the market is, between 10 and upwards of 30, even 40%. You can't get that kind of rate of return in anything that you would see in TradFi without significant risk. You can get that with a delta neutral position in the internet economy. So what we're seeing here is a move from, I bought a cash equivalent, I bought a treasury, I'm holding on my balance sheet, I'm earning 4%. Yeah, but you know what? Now I can create a liability in the form of a stable coin. I can deploy that stable coin into decentralized finance, and then I can compound my earnings. I'm still getting paid the 4.5% on my cash equivalent, and I'm earning an additional 4 or 5% by providing stablecoin liquidity in the internet economy. And that internet economy, that alternative system, is growing and it's flourishing. And the Genius Act and other things, I think, are going to accelerate that growth that we see. And MicroStrategy plays a big role, and I think even People's Reserve will play a big role in the long term because we hold the reserve asset of the internet economy. The United States is the most important global financial leader because it's their currency that is actually the reserve currency of the world. Well, the reserve currency, or I should say the reserve money, the reserve asset of the internet economy is Bitcoin. And the entities that hold Bitcoin will be the future central banks. And I think for most of your listeners, central banks, as it should, probably has a derogatory meaning behind it. But in the future, I think Bitcoin bankers who are more free market oriented maybe can salvage the reputation of what it means to be somebody who's playing a role in discovering the price of money. The rate at which People's Reserve borrows from MicroStrategy on an overnight basis will be the rate that is equivalent to the current federal funds rate or the front end of the yield curve. Then Bitcoin-powered financial products like a 5-year Bitcoin-powered mortgage or a 5-year Bitcoin bond all the way out the yield curve to 10 and 20 years, those will be the instruments that the free market looks at to understand the price of money in the free market internet economy. Meanwhile, you're still going to have to wake up and check the 2-year and the 10-year to understand the price of money in the traditional finance world. So we're splitting into two worlds, and there's going to be different entities who control the reserve assets of those worlds who rise to the top and have extreme influence in the price of money.
We're split into two worlds, but then at the same time, they're crossing and converging and overlapping at the same time. So you mentioned BlackRock earlier. They've taken a U.S. Treasury, which is the bedrock of the global financial system today, TradFi. They've taken the U.S. Treasury, put it into a fund, and then tokenized the fund, Buildle. And then those tokens of that fund are now trading on Crypto.com and Deribit in the crypto economy. So tokenized U.S. Treasuries. But then on the other side, you have MicroStrategy, which has now created the preferred shares. The latest one they've created, which is called Stretch, STRC, is basically a stable coin. It's like a central bank stable coin that they try to keep pegged around $100 par, and then they increase or decrease the rate to keep the price stable, sort of like what the Fed does, raising and lowering the rates to keep the price stable. So you have sort of like the Bitcoin crypto economy doing this that's crossing the TradFi and TradFi crossing over. And so it's pretty interesting to see sort of how these separate systems, parallel systems will eventually merge, and we'll kind of see that convergence happening there.
And I think, what really drives that convergence is the fact that I love Michael Saylor. He's opened the Pandora's box to financial engineering. Even at People's Reserve, we're building on top of his shoulders. And we've taken notes from a very long time ago, watching what he's done. But what it really boils down to is problem solution. There's a real world problem. And that problem is that real interest rates are negative. So a 9% rate backed by billions of dollars of Bitcoin equity is a really important tool, because when you can only get 4.5 from the government or 4 from the government, or in the near future, 1 or 2 from the government, yet the rate of inflation or the increase in prices is going up at 6, 7, even 10%, you can't eat that negative return, right? You can't have a real rate of negative return. That's a big problem, especially for businesses. So you need a solution. And what we're seeing right now, this is what all engineering is. Engineering is creating a solution to a real world problem. And because of the cracks within the traditional system, these problems are becoming bigger and bigger. And Bitcoin is providing a way to solve that problem. And whether it's MicroStrategy or People's Reserve, we are taking Bitcoin and we are fusing it into financial tools in order to solve these real world problems. And by solving people's problems, you deliver value. And that's what Bitcoin's all about. It's about value delivery instead of a fiat mindset, which is based on value extraction. And these value extraction schemes have created such big problems that we now need a foundational layer built on equity rather than debt in order to solve these problems. And as you said, it's very interesting to see how fast these worlds are coming together. I do not think investors anticipated that we would see Bitcoin working in tandem with the dollar to create cash flow products to solve interest rate issues and inflation issues. But here we are today with brand new products the world has never seen before that are now solving these problems.
Yeah, and it certainly makes me think about the quote from Bill Gates saying, most people underestimate or overestimate what they can do in a year, but underestimate what they can do in a decade. And to your point, like on one hand, these things seem to be moving extremely fast, but then so many people are like, but Bitcoin's down this week. It's like, stop anticipating what's going to happen this week and think about what's going to happen over the next couple of years. I mean, the entire world is literally shifting, but you kind of have to zoom out a little bit to get a different perspective. Let's wrap it up. I got a big question for you to kind of wrap this up. You've talked about like the fiat mindset. You just said that right now. And sort of how Bitcoin sort of has changed some of that thinking from a fiat mindset, a debt-based mindset to an equity-based mindset. What would you say beyond the finance and technology? What's the single most profound change that occurs in a person when they shift their unit of account from a debt instrument to Bitcoin, an equity instrument?
Yeah, I love that question because they have that famous saying, you don't change Bitcoin, Bitcoin changes you. Well, governments don't change Bitcoin, Bitcoin changes governments. And business doesn't change Bitcoin, Bitcoin changes business. And that's what I'm most excited about moving into the future because those changes are based on an extraction mechanism versus a value delivery mechanism. And I think the biggest change you see in Bitcoiners who have been responsible savers of it and benefactors of increased purchasing power is that once you remove the financial stress that the current system exudes on almost everybody, except the very 1% who have a large disproportionate amount of the wealth. Your how do I say this? Your motivations change. I think a good example is here in Florida, we have a big services industry, right? We have a lot of vacationers who come here, and we have a big services industry. As a matter of fact, the whole country has a big services industry. But I went out to dinner the other night with my family, and I got bad service, and it was just I was thinking to myself, and I told my wife on the way home, I'm like, you can't blame them because they're serving and they're getting they're making more money, but they're doing less stuff. So these people are trapped within this inflationary problem where the rate of dilution of the dollar is so fast, and the slowness of the increase in wages. It creates frustration. And for any listener that's in that situation right now, keep working hard, keep delivering value to the economy, and do it with a smile on your face, and save in Bitcoin. Utilize Bitcoin savings technology to get ahead, because when that stress is released from you, when you have financial freedom, how you look at the person next to you, how you treat the person next to you changes. And when it's like the butterfly effect. If you do one nice thing for one person, they might turn around and do a nice thing for another person, who might do a nice thing for another person, and that nice thing might save that next person's life. But in the fiat world, who cares? I got my own problems. I got to worry about me first before I can serve you, right? If you're on the airplane, put your own mask on first before you put your kid's mask on, because if you don't put your mask on, you might not be able to breathe and put their mask on, and you both die. And fiat forces you to look at yourself first before you look to others. But when you embrace Bitcoin and you have financial freedom, you're able to look at others first, and you're able to serve others. And it's a Christian mindset, I believe. Jesus came here as the King of Kings and Lord of Lords, but he washed his disciples' feet. And Peter said, Lord, I'm not going to wash your feet. And he said, if you don't wash my feet, if you don't let me wash your feet, you have no part in my kingdom. And he said, then please go ahead. But in this world, we flip that upside down. We want to be the served. We want to be the king. We want to be in charge. And that's a fiat mindset. Bitcoin comes in, gives you that financial freedom and says, wow, life is great. This is amazing. This is a miracle. But this is what we want. We want the goods and services in exchange for the money. We want the experiences, and we want to take these experiences and leverage them to bless others and give them good experiences. And that's really the most powerful thing about Bitcoin. And I think we're going to see it not only in personal and business and government, but it could change the whole dynamic of human relationship. That's how important money is at a foundational level.
Wow. That's big. And I see it, as you said, right? It changes everything, everyone. And I love the biblical reference to serve and not be served. That's the purpose. But unfortunately, Maslow's hierarchy of needs, we have to take care of those base layer of needs. And Bitcoin allows most people to do that if you take advantage of it. You don't have to wait for the government to add a strategic Bitcoin reserve, as you kind of alluded to in the beginning. You can just adopt it as a reserve today. And so you can take care of those base level needs, so then you can be more of a servant in a good way, not in a bad way. Awesome, man. So much good stuff here. I appreciate you taking the time to come talk to me today. What should people be watching, following to kind of pay attention to what you're doing?
Well, thank you so much for having me, Mark. It was an absolute pleasure. And you can just go to peoplesreserve.com to learn more about People's Reserve. Of course, follow us on X at People's Reserve. And if you want my macro input, you can follow me on X at CJ Konstantinos. And thanks again for having me. It's been great.
Yeah, thank you so much.